Howdy there, folks. Welcome into today's video. A little bit of a sad video here today. Well, one side of it can be sad. The other side of it can be very encouraging. I guess it's all how you look at it in life, right? Glass half full, glass half empty. A lot of important things I want to show you in today's video to kind of illustrate this point I need to make in this video here today that I think is very, very important. Now, before we get into all that, first off, I apologize. I'm recording this video from my bedroom, and basically it's too dang cold outside to record a video. I can't record out in the living room area like I usually do because my wife's out there cooking, making all types of noise right now, and the garage is way too cold right now. I'm just gonna put it like that, man. It's cold out here in Vegas right now. I'm like, holy smokes, man, it's gonna start snowing soon. It's out of control. Alrighty, guys, I hope you enjoyed today's video. As always, appreciate you. Thank you for being subscribed. First place we're starting out here today is what I'm showing you. This is off of a website called Social Blade. Okay. Now, Social Blade's a website that you can see, like, basically YouTube views or subscribers for different channels over time, okay? And so where I want to start out today's video is just showing you CNBC Television. That's their main YouTube channel that they post, like, all their stock market related videos on, different people's opinions and interviews and all that stuff, right? And basically, you can see over the past several years, right? This basically goes back about 3 years or so. CNBC's obviously views have dropped off substantially, and subscribers have dropped off substantially. And the reason being is there's just a lot less interest in the stock market, okay? If you look at my channel, for instance, right? You could say, well, views maybe have held decent, but that's not the concern. Look at the concern right here, okay? Subscriber growth. There's basically almost no subscriber growth, especially in 2022, right? I mean, just like no subscriber growth at all, which means there's just like no new people looking to even get in the stock market right now. They're like, screw that thing. I'm not even interested, right? If we look at a channel like Kevin's, I mean, obviously he covers a lot of different subjects, stock market, the Fed, finance in general, right? And I mean, just look at like how much interest has like dropped there. It's significant. If we look at a Google Trends, essentially, I always say Google Trends is our friend. Type in something like how to buy stocks, right? And you look at the past 12 months, and it's just been obviously in decline over the past 12 months. But that doesn't even tell the real story. Real story, look at the past 5 years. And look at how far we have fallen for a term like how to buy stocks. The bottom line is right now, no one's really interested in learning how to buy stocks. They are not interested whatsoever right now. It's like, a complete joke compared to what it was, right? And if you look at a search term like Robinhood, which Robinhood's usually the most entry level brokerage into the stock market space. Now, what brokerage do I personally use? I personally use Fidelity Investments. That's what I've always used, right? And I think most people that are experienced in the stock market, especially that have significant amounts of money, don't really use, no disrespect to Robinhood, but they don't use Robinhood, like usually use Fidelity, maybe use TD Ameritrade, something like that, right? But Robinhood snags like a ton of the new entry-level investors. And if you look at like the search term Robinhood over the past 5 years, it obviously peaked during Rona. And ever since then, it's just been down in a vicious manner. It's just not attracting the people it once was, right? If you look at a search term like stocks to buy, for instance, right? Oh, a lot of people are always interested. I wonder what stock I should buy next. Like, let me hear other people's opinions, whether it's looking at videos or looking at articles or, that's just always popular, right? And you look over the past 12 months and that trend is just going down and down and down, right? Look over the past 5 years. I mean, look at how much it's back down to the gutter essentially now at this point in time. It's not a whole lot of people that are looking at like, oh, what stocks should I buy next? Like, it's just not, a thing that a lot of people are looking at anymore. This is pretty shocking, right? Stocks to watch, another very popular term, just like stocks to buy. Look at stocks to watch. The interest in stocks to watch is lower than it was in 2018. It's lower right now than it was in 2018. That's how bad things have gotten out there in terms of interest levels around stock market related subjects. That we're lower now than in 2018 for stocks to watch, that's extraordinary, right? If you look at a search term like what is a margin call, right? Obviously, we had a huge ramp up last year in 2022, right? And that's starting to drop because most people already got margin called 2, 3, 4, 5 times last year. and they're done, right? And those people left the market. But nonetheless, we saw the biggest increase by far ever in history, right? In terms of what is a margin call, like absolutely extraordinary. And it's pretty wild because you look even at 2009, for instance, right? When the market was getting absolutely wrecked. Market continued to get wrecked in the first 2 or 3 months of 2009, and obviously got wrecked in 2008. Even back then, we weren't even close in terms of search demand for something like what is a margin call. And obviously Google wasn't as popular back in 2008, 2009 as it is today, so that is something you should factor in there. But bottom line is, just like not even close, because what happened recently was a lot of people got so hyped and so excited in the stock market, right, that because a lot of people were making a lot of money, that they started we attracted a lot of the most risky gambler types to the market, essentially, right? And these are the Dave Portnoy type folks, right? That these folks, it wasn't just good enough to make money on your own money. You had to amp it up. And so people gravitated toward things like call options, right? I remember there was a video here on YouTube that was basically an options video, and that video got released, and this guy got like over 10 million views from this options video because there was such an overwhelming demand for people looking up things like options, and just extraordinary amount of folks look, because that's just a crowd we attracted for the stock market for that given moment, right? It was very much a gambling type, and if you're into that type of mentality, you're going to be margining out, you're going to be maxing out. It was Wall Street bets. What are Wall Street bets? that whole movement, right? It was just mass amounts of risk taking, margin, call options, then shorter term call options, right? And whatever it became a game of not even making money. It started becoming a game of almost like having fun, or like the thrill, the high of like that, oh my gosh, I just lost or made a lot of money, right? Living out, I lived in Vegas for many, many years, and I've also seen a lot of people around me that are really into gambling and those sorts of things, right? And you see one of the things that attracts them so much is that high of like, or just that, it's not even like the high, it's just the excitement, that like dopamine hit of like, oh, I could lose or win right now, right this second, right? Like, why do so many people play slot machines? It's that dopamine hit of like, I'm going to win or lose something within the next 2 seconds, right? In the stock market, attract a lot of that sort of crowd, right? Which, thank Lord, those folks have gone. I just want to say that. Thank Lord, those are some of the worst, most annoying people I've ever seen in the stock market in my life. And I am so happy they are gone, because they make a mockery of something I've been doing since 2008, 2009 when I got in the market, right? Those folks are the biggest joke, and thank Lord they're gone out of the market, because I despise those people absolutely to the highest level possible. And I think for all of us that are serious long-term investors and like to make investments in companies for the next 3, 5, 7 years, I think a lot of us are very happy that those folks are long gone now at this point in time, because they were the worst. And I usually don't have a lot of negative things to say about folks, but those folks, they were the worst, the absolute worst, okay? Now, I think there's a lot of different reasons on why demand for stock market related stuff is down so significantly. I think there's a few core reasons, okay? And these are kind of my core reasons I want to take you kind of through here and show you, okay? The first reason up here has to do with savings rates. Now, if you are somebody that's interested in trying to look to invest money, looking into buying stocks, making investments, right? Usually you're doing so because you have excess money around, right? If you don't have excess money around, like, why would you even look into stock market investing? Like, why would you even look into investing? Because you don't have the money, right? And so what we've seen because of, unfortunately, inflation is savings rate has dropped off the cliff for folks in the United States, right? Back in this time, it was very healthy, and now it's extremely unhealthy. And so it's not like we're in a position right now where a lot of folks just have significant extra money around. And for a lot of you guys that watch my channel, a lot of you guys have good jobs. You keep your expenses relatively modest. So at the end of every, couple weeks or the end of every month, you're always in a position to buy stocks, right? And that's great for you guys, but for a lot of folks, that's not the situation. They're living paycheck to paycheck right now, right? And their savings have basically depleted to nothing. And so they can't even consider like buying stocks. So even if they saw like this stock is trading at this, or Tesla's at this, right? Or Meta's at this, or Amazon, or whatever stock, right? They can't really take advantage of that because they have so little funds around right now. And so I think that's one of the core reasons why what I just took you through there, that lack of demand for stock market related things and new people looking in the market, is because people just don't have that excess capital around to even think, oh man, maybe I'll invest, maybe I'll go do something with this money, right? So I think that's a factor that has to play in. I think the next factor that has to play in is unfortunately politically related. I don't think a lot of people, including Democrats, have a lot of faith in Joe Biden, just to be quite frank. And I have a lot of friends that, are very in the political sphere. Some are Democrats, some are Republicans. And, myself, I've never go down that route, right? But I watch all these people's sentiment. And I can tell you there's just not a lot of faith around Joe Biden. And that hurts people when it comes to investing. And I'm talking even Democrats. Not a lot of people are like, they're so excited about Joe Biden and what he's going to do for the economy and things like that. And I think that's putting a real damper on also investing demand as well, where people are just like, they don't feel comfortable investing under a president that they're not, very excited about, especially on the economic front, right? Versus, Trump, people absolutely despise Trump because of the things he would say, his rhetoric, his approach, his tweeting, and a lot of various factors, right? But the one area almost everybody ever knew while Trump was in office was very confident in his ability to lead the economy. And that led to a lot of folks to be confident if they're making business decisions or making investment decisions. A lot of folks, whether they were Democrats or Republicans, right? Even people that hated him believed that he was the best thing for the economy and for the stock market and those sorts of things. And so I think that's another factor that does come into play here. If we had somebody like, let's say, like DeSantis in office, if he runs in 2024, I think there could definitely be a big shift in the sentiment around if people are feeling comfortable investing in the market again, making business decisions and things like that. But I just got to be quite honest, based upon everybody I speak to, people just aren't very confident. And they're kind of like counting the days until, he's out of office, essentially, okay? And not because he's a super controversial figure, because people necessarily hate him. People hated Hillary, people hated, Trump, but it's just because people just don't have a lot of faith in him. He doesn't really inspire in that way, right? Next up here, right? If you look at, I'm sure some of you guys might have seen this before, psychology of the market cycle, right? And we didn't reach really a capitulation for the overall, let's say, S&P 500, but we did absolutely reach capitulation for the retail crowd. And that's what today's video is really focused on, right? All those search terms and all those things like that, that's all retail crowd. And did we have capitulation? Yes, we had the worst capitulation we've seen in the market since, honestly, the tech bubble, right? I mean, we're talking about stocks that retail was in across the board, down 60, 70, 80, 90, 95, 99, 100%. The most level of capitulation you could ever imagine. It happened. It played out, right? And, that led to an anger, wild, and people are past kind of the anger part now. But that was definitely a huge component of 2022, was just this anger, mad. Like, why did I even get in the market? Like, who shorted the market? Look at what the Fed did. They screwed everything up, right? And now we're over here. We're in the depression and the disbelief phase, right? And I definitely noticed this in the disbelief phase because, recently we've seen a lot of stocks start to come back. We've seen the market start to come back. No one believes it. Even myself, somebody that's been in the market for a long time, even I'm kind of like, I don't know if this is real. We could be just down back again. And the reason being is we had 18 months of just kind of getting pounded, right? And capitulation on top of capitulation and just awful. And so even when you start to get a rally, you don't believe it. This recent rally we have, I can't say that's a start of a new bull market. I can't say that. For all I know, we're still in the bear market. And for all I know, 3 months, 6 months from now, we're going to be lower, right? And so I think we're in that either depression or disbelief stage now at this point in time, where people are just kind of down and out and just kind of like, thrown in the towel. And that's for most folks. Now, there's a select group, and I know that some of you guys that watch this channel, right, that are still happy to buy. And I'm one of those people that's still happy to buy, right? And even though I might be in the stage of maybe disbelief, I still look at stocks and I got to buy the stock. It's a great price for a long-term investor like myself. Sure, it could be lower in 6 months. I gotta take that opportunity because I don't know if it's going to be lower in 6 months. The bottom line is it's a deal today, and I've got to take advantage of that deal, right? And so, this was the stage we were in, obviously, when the money printer was on, and coming out of Rona, and just euphoric. I mean, we came off of you got to think about the stock market we were in prior to Rona was a very good stock market. It was a very healthy stock market. 2019 was a very good year for the market. I made a lot of money 2019. Some of you guys, if you participated in the market, you made a lot of money in 2019, right? It's a really good year. So we came off of just a good decade. Then you get hit with Rona, stocks fall massively, Fed comes out, right? And the government comes out, it helps everything out. We are coming off a very good economy. Things get back on the right track. It led to this ultimate stage of just euphoria and good feeling that we're only going up forever, right? And then we had to go through all these stages, and that was rough. And most of these stages either played out at the end of 2021 or 2022, and it was painful, man. And it's a whole process. But now we're over here, and nonetheless, it's basically kind of what we're going through now at this point in time, right? Now, it was interesting. I was speaking to a friend, and this reminds me a lot of the stock market, right? And then I want to tell you a very important thing that an accounting teacher told me back when I was in college in 08, 09, 2010. And but anyways, first I was talking to a friend, and we were talking about sports in Vegas specifically, right? And we were talking about the Golden Knights, and he was talking about how full the arena is many times, and how Vegas has backed that team and whatnot. And I said the only reason Vegas backed that team, to be quite frank, is because they were so damn good from the start. They went to the finals their first season. People are bandwagon fans. The masses are bandwagon fans, and whatever's doing good, they like to attach themselves to that, and whatever's doing bad, they like to distance themselves from. So what I give for the Golden Knights example, right? The only reason that they have so many fans and so many people backing it, the only reason is because they did so damn well. I could tell you that arena would be half full every night, or less than half full every night if that team sucked from the start. Bottom line, that's just the way it works, okay? And the same thing goes for any sports team. And if you come from the sports world, you understand this whole bandwagon fan. But the same exact thing happens in the stock market. When the stock market's hot and it's doing great and everybody's making money, everybody wants in, right? It's a thing that everybody wants to attach themselves to. And I can even say crypto kind of can get that sometimes. Bitcoin, right? Everybody wants to be part of the winning team. And at some point, it becomes bigger than money. It's not even about the money at some point in time. It's just about the feeling of you're on the winning team. I'm part of this. I'm part of this thing that does so well. And now I can tell my friends and my family members, oh, yeah, I'm in the stock market. Look it's up 20% this year. Look at all these stocks. Oh, yeah. Oh, yeah, you heard Tesla stocks going up? Yeah, I'm in Tesla stock. You know what I mean? that becomes the vibe. And it becomes about people's egos rather than even making money in the end, right? Which the stock market, it should never be about ego. The stock market should be about investing and making money, right? But it becomes about things that aren't even related to making money. It becomes things about ego, right? And so that's something that plays out there, right? Now, something one of my accounting teachers told me, my best accounting teacher that I took 3 levels of accounting with back in college, he used to give us kind of some of these talks before we get into kind of the financials and whatnot, right? I remember a lot of these talks he would give us, and by the way, he was a huge gold bug. He loved gold. But he also would talk about other financial markets and things like that, and he would talk about the stock market. And he would talk about stocks sometimes, which he wasn't the biggest fan of, but he still was one of those that didn't really like it that much, but he understood it very well, and he understood kind of the psychology of it, and also market dynamics and those sorts of things. And he used to give us this basically kind of saying. And he's like, imagine it like this. The stock market is this place that, imagine you're going to have a huge pool party, right? And it's fun at first when, like, maybe it's just you and a few friends are in it. But then the pool party gets too overcrowded. And next thing you know, everybody's getting too drunk and people are peeing in the pool and somebody throws up in the pool and the water gets real disgusting. And like, by that time you should have already gotten out of the pool, essentially, right? And I can tell you, this is a very similar analogy that if we look at just my stock market journey that started back in 2008, 2009, when I got in, the pool was pretty dang empty because everybody had just been absolutely wrecked in the market. No one wanted a piece of the stock market thing. And so I got in and dipped my toe in the water and I was like, oh, this is all right. I can swim around in this water for a bit, right? And over time, over the years, it was a healthy amount. We had a lot of fun. Right? Made a lot of damn money. Had a lot of fun and made a lot of damn money. And over time, more and more people got in the pool. And then 2020 happened. And 2021. And the pool got way overcrowded. And everybody got super drunk. And the pool water got disgusting, right? And there was a moment in time when, looking back, we probably all should have got out of the pool rather than staying in the pool and having to put up with that gross water we all had to put up with. But it is what it is. You can't rewind time. But now, I can tell you, this pool doesn't look like this anymore. This pool looks like maybe a few people are in it now at this point in time, right? And just based upon all the data, the trends, everything, what we see is the pool's not empty, but it's got a very small amount of people in it now at this point in time. And the pool will not be full like this for a long time. I'm talking 10 to 20 years. That's what I'm talking. We will not have a pool this full for 10 to 20 years from now. The last time we had a full pool like this was back in the tech bubble, prior to 2020, 2021 situation. That was the last time. So we will have a full pool again someday, but it's going to be 10 to 20 years. And I think that's the encouraging part for all us investors is now we can have some fun for the next 5-10 years. And we'll have ups and we'll have downs in the market. We'll have some stocks that do amazing. We have some stocks that do bad. But we'll be able to have a lot of fun over this next 5 to 10 years. Okay. Hope you guys enjoyed today's video. As always, I appreciate y'all joining me. And yeah, man, it's been a wild ride. And it will continue to be for a long time in the future. I appreciate y'all. Thanks for being subscribed. And have a great day.